Welcome back to the channel. Today we're diving deep into what's really happening inside the company and among its backers. And let me tell you, there are multiple developments that strengthen the long-term story. Now, the biggest operational headline of the day wasn't even about the stock price or a flashy chart move. It was about something far more fundamental: culture. Kasnjation, the newly appointed CEO, tweeted out that Monday marked the very first official day of OpenDoor operating as an in-office company. At first glance, that might sound like just another procedural corporate update, but if you dig deeper, it reveals a whole lot more. For years, OpenDoor prided itself on being a remote-first workforce, distributed across time zones, cultures, and geographies. That approach worked for scaling quickly and hiring widely, but the flip side was fragmented collaboration, slower feedback loops, and the occasional lack of visible accountability. By bringing everyone back into the office, the leadership is signaling a desire for faster iteration, tighter communication, and a culture where accountability is not just abstract, but visible in everyday interactions. When you're in the middle of a strategic reset, trying to build new products while sharpening the focus on profitability, the way teams work together is just as important as the products they ship. So, while a few traders might interpret this office return as a prelude to cost-cutting or headcount reductions, the more accurate read is that it's a calculated attempt at sharper execution and stronger alignment across teams. This video is for educational and informational purposes only. Nothing discussed here should be taken as financial advice, investment recommendations, or trading guidance. Always do your own research, consult with a licensed financial advisor if needed, and remember that investing in stocks or cryptocurrencies carries risk. Your money is your responsibility. This naturally leads us to the second critical point: headcount. The balance OpenDoor's leadership is trying to strike here is fascinating. Over the past several weeks, the broader narrative about workforce efficiency has really taken hold across industries. We've seen company after company tout leaner operations or efficiency drives. Keith Raboir and Eric Jackson, two major voices shaping discourse around OpenDoor, have openly suggested the company needs to operate leaner, faster, and more efficient. At the same time, Cass himself has gone on record emphasizing that top-tier talent continues to join the company from some of the most elite tech firms in the world. He even said, and I quote, "Insanely awesome people are leaving elite companies because they believe in OpenDoor's mission that home ownership matters." To some, that may look like a contradiction. How can a company cut bureaucracy while hiring? But in reality, this is exactly what a talent upgrade looks like. The goal isn't to blindly cut jobs for the sake of short-term optics. It's to prune away layers of bureaucracy while simultaneously adding high-impact contributors who can genuinely elevate the mission. That's a totally different narrative from the blunt instrument of mass layoffs. This is about creating a team that's leaner, stronger, and unified around a mission that is both socially meaningful and strategically ambitious. If you found this breakdown helpful, make sure to hit that like button, share this video with others who follow the markets, and subscribe to the channel for more deep dive analysis and updates. Don't forget to turn on the notification bell so you never miss out on the latest insights. This was the kind of modest reversal you almost always see after a couple of strong green days, when short-term traders lock in profits and create a small pullback. Importantly, there were no fresh SEC filings today, no surprise analyst downgrades, no sudden lawsuits, and no regulatory curveballs. In other words, nothing in the fundamental story changed. If anything, you could argue the fundamentals are improving. Consider what's just ahead for OpenDoor. The much-discussed BOF product that Cass has been teasing is set to launch in a test market next week, with Texas as the most likely candidate. That product, combined with the company's increasing integration of artificial intelligence, is laying the foundation for a different kind of company. They've already rolled out an OpenDoor assistant powered by Libra chat, and more AI-driven features are on the horizon. The clear message here is that leadership isn't content to simply ride the macro waves of interest rates and housing cycles. They're actively trying to reshape the way the company itself operates. For investors, that's critical. It means the story isn't just dependent on cyclical housing tailwinds. It's also about innovation, efficiency, and operational excellence. Of course, not every investor buys into this rosy view. Skeptics remain concerned about dilution, competitive pressures, and the ever-present risk of execution missteps. But the recent moves by large institutional players paint a different picture. Access Industries recently sold 12 million shares, which cleared a significant overhang from the stock and removed a psychological weight from the market. Meanwhile, Jane Street, one of the most sophisticated quant trading powerhouses on Wall Street, disclosed a massive stake of more than 44 million shares. Let that sink in. Jane Street, which was previously flagged as a short player in OpenDoor, is now sitting on a stake worth more than 5% of the company. This is not a casual trade. Jane Street doesn't bet with emotion or memes. It bets with cold, hard data. If they were just looking to make a quick flip, they wouldn't be committing at this scale. For them to move from shorting the stock to becoming one of its largest shareholders is a tectonic shift that speaks volumes about the data-driven appeal of OpenDoor's evolving model. This is also why the so-called open army retail narrative matters so much. The people who held on through the red days, who endured volatility, are now seeing their conviction validated not just by influencer talk, but by serious institutional action. When Eric Jackson congratulated the open army for their resilience, it wasn't just empty cheerleading. It was recognition of a genuine change in the shareholder base, a structural shift that could alter the stock's behavior going forward. The fewer weak hands in the mix, the less violent the sell-offs during bad news cycles, and the easier it becomes for good news to actually lift the stock rather than being immediately sold into. Next catalysts are obvious and potentially game-changing. The test launch of the new product in Texas will reveal whether OpenDoor can expand beyond just transaction timing and instead build long-term relationships with consumers earlier in their home ownership journey. If successful, this would generate a powerful data flywheel. Imagine consumers browsing homes through OpenDoor months, even years, before they're ready to buy, feeding the company a rich stream of demand insights and behavioral data that competitors simply wouldn't have. This is exactly the kind of platform play that investors usually assign higher multiples to. Add to that the AI push, which Cass himself summed up with the line, "Our team spends less time doing toilful work that machines should do." That's not just a catchy productivity slogan, it's the playbook for margin expansion. Every task automated is a cost saved. Every process streamlined is an efficiency gained. Combined with the in-office cultural reset, this positions OpenDoor less like a traditional real estate brokerage and more like a tech company operating in real estate. And that's precisely the kind of profile that appeals to quant firms like Jane Street and other data-driven investors. So, what are the takeaways from today's trading session? First, don't overreact to a single red day, especially when it comes after two strong greens. This is just normal market rhythm. Second, focus on substance, not noise. The substance is a company undergoing a cultural reset, bringing in elite talent, preparing to launch innovative products, and attracting serious institutional backing. Third, understand the narrative you're part of. If you're part of the open army, you're not just betting on a near-term price target, you're aligning yourself with a transformation. It's both the transformation of the company itself and, as Eric Jackson frames it, a transformation of how retail investors participate in wealth creation. That's a powerful story, but it's also a long game. There will be volatility, there will be frustrating red days, but if the thesis holds, the payoff can be significant. Keith Raboir's recent comment about preferring people to do real work in the office rather than at home wasn't just a workplace philosophy, it was a metaphor for the company itself. Real work takes patience, discipline, and resilience. The same applies to stocks that aspire to transform entire industries. They don't just march up in a straight line. They grind, they lurch, they test conviction, and then, if the underlying story is right, they break out. So when you see today's dip to $8.20, don't view it as invalidating the bullish case. If anything, it underscores the importance of keeping perspective. The leadership's moves, building a lean, innovative, talent-rich company, are serious. The presence of Jane Street on the shareholder register shows that serious capital also sees promise. And the retail community, from Drake's entourage to everyday investors who've been holding since the stock was under $1, remains energized and deeply engaged.